Welcome, everyone. If you are currently in the market for a waterfront home or a second home by the beach, or if you plan to be in the future, you'll want to watch this video. Welcome. Today, we will be talking about the recent changes put into place by FEMA, updating the National Flood Insurance Program, including new pricing called Risk Rating 2.0. My name is Corrine Geiger with REMAX at Barnegat Bay in Manahawkin. Today, I have a special guest with me, Tyler Andron from Risk Reduction Plus Insurance, and Tyler is very knowledgeable about the flood insurance changes. So we have some questions to ask him today in order to help us better understand these changes that are going to affect the industry. Tyler, thanks so much for being here, and tell us a little bit about yourself.
Awesome. Yeah, thanks so much for having me, Corinne. I'm super excited to be on here. And as you said, my name is Tyler. I am the vice president of my company as well as partner, Risk Reduction Plus. And we specialize in flood insurance. So I've been doing this now going on 10 years. I'm a certified floodplain manager, which just means that I have to take CE credits and get tested on how to build in flood zones, the National Flood Insurance Program, like you touched on, different forms of flooding and all sorts of stuff like that. But like I said, we specialize in flood insurance. We do it nationwide. Along with being a certified floodplain manager, I'm a licensed insurance agent, and my couple other companies manufacture flood mitigation products. One of those companies is called SmartVent. They're foundation flood openings that are required to be in homes in flood zones, residential homes. Nationwide, it's a building code requirement for new construction. But those vents save people off flood insurance. So that's really why we got into the insurance game, was because these vents that we manufacture save people off flood insurance. So we're able to really bridge the gap between properly mitigating a home and how that influences someone's flood insurance premiums.
Fantastic. That's great. They go hand in hand. They really do. And that's, I've had some situations where homeowners have had to put in flood vents after the fact because they're not, their insurance was sky high without them. So.
Yep. Yeah. And what we do is we show if that person were to do that, what the return on investment is and what the premium would go down to, so that it really incentivizes them, as well as it lowers the risk because those products protect the building during a flood.
Right. Very good. Very good. Okay, so let's talk a little bit about these changes that went into effect, I believe, on October 1st. And I have a couple of questions for you. Can you tell us the timetable for the new changes to take effect?
Yeah, so Risk Rating 2.0, and I've been doing a lot of presentations on it because it's really a hot topic now. I actually did a presentation with Dave Marstead, who runs the Risk Rating 2.0 section of the National Flood Insurance Program. Okay. And I work a lot with FEMA as well. But Risk Rating 2.0 really is the first big change in 50 plus years since the program was formed in 1968. And it just came out October 1st for all new policies going into effect. So anyone buying a house basically now and into the future will be using Risk Rating 2.0's rates. And then they have, that's called phase one. And then they have phase two, which is April 1st, 2022. Okay. And what that would be for is when people with existing policies renew. So if someone has a current flood insurance policy, and let's just say they renew April 2nd, they then would go down into the Risk Rating 2.0 rates. And now it wouldn't be instantaneously if they would be lowered. So if Risk Rating 2.0 shows they should be paying a cheaper premium, they'll go right down to whatever that new premium is. Okay. But if it shows that they're going up, what would happen is they'd go into a glide path, they call it, and they would increase 15 to 18% a year every year until they hit that new number, whatever that number is. So an example would be we have a homeowner that's paying $1,000, let's just say, easy numbers. They're paying $1,000. April 2nd comes around, their new policy renews. they would go up, and it shows the new rates should be, let's just say 2,000 for, again, easy numbers. Their new premium for April 2nd would be probably around $1,200. The following year, it would continue to increase $1,500, and it would keep increasing until it hits, again, that new rate, which is $2,000.
Okay.
So that would be all for existing homeowners. But anyone now that's buying a house and has to get a new policy would go right into the risk rating 2.0, whatever that rate shows.
Okay. Okay, so how are we able to determine what the flood insurance is going to be? In the past, we've always had to get a flood elevation cert, and that was required to get a quote unless it was an older house that was grandfathered in. But how do we know is every house on the block going to pay the same since it's now going by area?
Yeah, so previous, as you said, the NFIP rated solely off of elevation difference. That's why the elevation certificate was so critical, because it would show what the lowest rated floor level was compared to the base flood elevation level. So the BFE, just to give the listeners an idea of what that is, FEMA puts a BFE, or base flood elevation level, on each mat. And then that's basically what they believe the water will rise to in a given storm event. So you might see in New Jersey, you'll see 7, 8, 9, 10, and it could even be higher. And that's not, say the BFE is 10, that's not 10 feet from ground level. That's 10 feet from mean sea level. And then what they would do is say, where's your floor level? And let's just say for that example, it's 8. They take the 8 from the 10, and that shows them that they're a -2. Previous to risk rating 2.0, a -2 would pay around $2,500 to $2,600 a year for flood insurance. Now with risk rating 2.0, the elevation certificate isn't as critical. And the reason why is they're kind of taking the modeling approach of what kind of the private flood insurance market has been doing the past 5-6 years. They're not just taking into account elevation difference. They're looking at area. They're looking at historical data for that area, type of flooding for that area, type of house, whether it has a garage underneath, a crawl space, a basement, etc. Replacement cost. So they're looking at what it costs to replace that house. The higher the replacement cost, the higher the flood insurance premium is going to be. And then using all these factors, they then determine the rate. And just to talk about like why they're doing that change. One is that the archaic way of going just off elevation difference was not working. The NFIP is over $20 billion in debt because of that. So they definitely needed to change. And then also just looking at it from a normal insurance standpoint, as most of the listeners I'm sure can relate to car insurance, let's just say, they're not looking just at what type of car you have. They're looking at your age. They're looking at your gender. They're looking at what area you're in. So there's a ton of different things when assessing a risk. And that's really why the National Flood Insurance Program is doing this change. But to answer your question directly, all those things, distance to flooding, historical data, replacement cost, ground elevation, that's what they're using to really determine what these rates are for homeowners and business owners.
Okay, so then if I am selling someone a house that has flood insurance in now, can the buyer still assume that policy, or does it have to go, as a new policy?
Yeah, so for someone that is purchasing a new home or a home from someone who already has a flood insurance policy, what they're going to want to do is, one, get quotes themselves just to see kind of what the risk rating 2.0 rates are, as well as they may qualify for other private markets that may be more beneficial depending on the area and the whole situation. But to answer your question, if it shows that the legacy rates, and that's what they call the rates before risk rating 2.0, if it shows that the legacy rates were better, and that homeowner has a better premium than what the new owner can get, they
Mhm.
are able to assume that policy, take that policy over. And then what would happen is when they go to renew after April 1st, 2022, they then would go in that glide path and start to increase. But they're able to keep those original rates that the previous owner had by assuming that flood insurance policy.
Okay, so then from now, say until April 1st, is that different than, so anyone buying a house now is still able to
Assume.
assume?
Yeah.
So their
After April
policy,
1st as well.
right, so their policy may not be up then till October of next year, something like that. So then they would renew then, and then that new would be going into effect, the percentages increase.
Yep, exactly. Yeah. So they would take over the policy. Let's just say that original owner's policy, like you said, renewed in October. They'll keep that policy, whatever that rate was, let's say $1,000. And then once October comes, 2022, they'll then hit that glide path. And then, the renewal would be, let's just say $1,150 per year. And then, the following October 2023, it would be $1,400 depending on what they say the new rate is for risk rating 2.0.
So then how do you know if you're assuming that policy? Does that insurance company then tell you, okay, this is the new rate and that's what eventually it's going to go up to when you renew?
So April 1st really is when this phase is coming out. I've been told that they will have what then they call this the actual risk rate. So the actual risk rate is what the risk rating 2.0 rate is.
Okay.
And I've been told that will be listed on renewal invoices as well as new declaration pages after April 1st. I've been told that will happen. I'm not necessarily sure if it actually will.
Okay.
But I have been told that. And then also, if they did want to see what that rate is, that's why I said originally, go get a quote themselves, a flood insurance quote. And act just like, hey, I need a flood insurance quote for this. They get that rate, then that's the rate, the risk rating 2.0 rate. So if it shows 5,000, just crazy scenario, it shows $5,000, they get a quote and the current owner has 1,000, then they're going to say, I want to take that policy over.
Sure. Okay. So what type of, I get quotes for insurance often for my clients, or I have them get it. What type of information now are you going to need? Is it going to be the same year built and all that type of information, or for a quote?
Yeah. So what we need is, and we have because we specialize in flood insurance, we're doing this 20, 30 times a day. Really just the address, the building owner's name, to put, on the quote if needed. Okay. What type of loan that they're doing, we like to find out, whether that be an FHA or conventional mortgage, because that shows us what markets we can go to, if private flood insurance is an option or not, so that we can present that all to the client.
Okay.
And then other than that, year built stuff like that, it's all, as you know, Corinne, is pretty much online. You just pull up the address, it'll show you the year built, it'll show you all that stuff.
Okay.
The only difference, I guess, with risk rating 2.0 is before, if it was a post-firm property, and what that means is it was built after a flood insurance rate map. So pretty much say 1975, could be 1980, depending on the area, and after, now is no longer required to have an elevation certificate. So previous, with the legacy program, we would not be able to even quote it through the government without an elevation certificate if it was post-firm. Right. Today, you can just send me the address, or any agent an address, and whether it's post-firm or pre-for whatever, they can get a quote, right, just without it. Now, the elevation certificate could help. It depends really. And I've done about 2,000 quotes since this has come out. And we're really tracking the data for FEMA just because we're trying to really nail down these rates. And there's no really rhyme or anything to when the elevation certificate helps. And that's what we're trying to track, to be able to say, if you have this type of house, you're going to want one. Right. And there's not really that. It's pretty much scattered. So if you go to a knowledgeable agent, and for example, what we do is we just input, positive numbers into the elevation certificate. So in our system, we act like they do have an elevation certificate and put in, positive numbers. And if it comes out to a good rate, then we let the client know it may be worth getting an elevation certificate.
Okay.
But to get that actual quote, they don't need an elevation. We don't need an elevation certificate anymore.
Wow. Okay. All right. The next question I have is, how does primary home versus second home flood insurance rates?
Yeah. So the only difference is the primary homeowners have what's called a $25 HIFA surcharge, and secondary homeowners have a $225 or it's $250 plus the $25 from the primary. So $250 total HIFA surcharge. So the difference is $250 basically.
Okay, so that's the only real difference in the two.
Yeah, there's no difference because they got rid of subsidies.
Okay.
Previous to during the legacy, you were able to get what's called a subsidized rate. So before, if you didn't have an elevation certificate, you got a subsidized rate, they called it.
Okay.
And if you were a secondary homeowner, the subsidized rates were a lot higher. Today, there's no subsidy because you're not needed to have an elevation certificate.
Yeah.
So really, the only difference is that that surcharge.
Okay. Okay. So, all right, let me see. So I have here, can we estimate flood insurance by the area? I guess you already answered that. It's best to just get the quote, I think, right?
Yeah, because it's very property specific.
Yeah.
I mean, it's crazy. I've done quotes on the same street and they were like $400 to $500 off.
Wow.
So and like I said, we're tracking every area that we do, every city, every state, every type of building it is to be able to figure this all out.
Yeah.
And I've done quotes where there are two houses on the same street and they're $500 off. So we can't give a blanket statement of like, all right, if you're selling in Tom's River, let's just say whatever, you're going to see like $2,000, let's just say.
Yeah.
We can't give that because it's even on a street level, they're different.
Right.
But I will say they are different, but from my findings, the closer to the water, which makes sense, the closer to the coastal areas,
Right.
They are higher
Yeah.
than more inland properties.
I was going to say, with Sandy affecting our area so much, that's probably counting against us big time for our location. I'm in Tuckerton, but any of this area, Tuckerton, Mystic, all that area, Manahawkin.
Yeah, they're increasing. Yeah.
Yeah, definitely. Yeah. So I wonder if it's best if a homeowner, if I list a house and I get a quote right away on that particular house, is that safe to say, okay, here's the flood insurance, the new rate?
Yeah. And that's what a lot of realtors reach out to us with, as well as lenders. Before they even show the house or before they even list the house, they ask for the flood insurance quote so that they're prepared when buyers come in to show them this is the flood insurance. Hopefully we can get a good rate so that they don't get scared away, because what happens a lot is flood insurance is very tricky compared to homeowners and auto insurance. So there's just more involved. FEMA maps, it's more government regulated.
Right.
So if they go to, say, their own car insurance agent or whatever, what could happen is they could be misrated. So even though they go to me and they go to someone else, there's times I can show a different premium than others because of the way I'm inputting it into the system. There's not like some big, like the government's not looking at every single policy. It falls on the agent to actually quote the property. And I actually did a presentation with FEMA where the representative said, not to shop rates, because really they should be the same rates.
Yeah.
Shop flood insurance knowledge. So when the homeowner is talking to, say, an insurance agent, they want to ask some questions about what the cost is, why the cost is. And if the person says, and the agent says, it's the government program, it is what it is, then they probably should go somewhere else because there's a reason why. It's not just it's because it's the government.
Right.
But yeah, they should get that, beforehand so that it does, because there's so many times where, and it still happens today, where I get a call for next week's closing that someone just found out they needed flood insurance, and it's not fun for everybody.
No, that's for sure. And
Yeah.
normally, if I listed a house, I would have gotten their flood insurance policy and a copy of it, but it doesn't matter anymore, pretty much, unless the quotes are really way off. Yeah. So, so when you run a quote, you'll run the FEMA and then also the private mortgage.
Yep. Yeah, as long as the homeowner, so if the homeowner's taking out an FHA mortgage,
Yeah.
they're only able, they have to go to the government, the
Right.
National Flood Insurance Program.
Right.
And the reason why is only because, not because one's better than the other. The reason why is the FHA guidelines label flood insurance as National Flood Insurance Program flood insurance.
Okay.
Whereas conventional loans, they just want flood insurance. So whether it's private or National Flood Insurance Program, they don't care.
Okay.
Now I've been told by people down at FHA and people with the MBA, which is the Mortgage Brokers Association,
Mhm.
that they are changing the FHA guidelines to show just flood insurance. But I've been told this since not this November, last November.
Mhm.
So the government moves slow,
Yeah.
but it should be changed at some point.
Okay, so that'll happen at some point.
Hopefully. It's going on a year
Okay.
and a
Good.
month.
Yeah. So, okay, so let me see. I think that was all my questions. Is there anything else that you think we missed or want to add?
Yeah, I did want to add, because we talked about earlier how the risk rating 2.0 rates. And one of those things that I get a lot of questions on is people ask, why does replacement cost matter in their rates? So I'll give you an example. We have a house, let's just say at Monmouth Beach, that's 6,000 square feet, bigger home.
Right.
And then we have a house, let's just say in, I don't know, somewhere else that's only 1,000 square feet.
Mhm.
Now with the National Flood Insurance Program, they're only able to get a maximum building coverage limit of 250,000 in building coverage. So both properties have the same amount of coverage.
Mhm.
So I get asked a lot, well, then why does replacement cost matter if there's the same coverage? And the reason why, to answer that question directly, is because let's just say that 5,000 square foot home gets hit, and then that 1,000 square foot home gets hit with a flood. They both get 3 feet of water in their house.
Okay.
That 5,000 square feet house has a way greater likelihood that they're going to exhaust the full 250,000 in building coverage.
Mhm.
That 1,000 square foot house may only need 80, 90, 100,000 to rebuild from, that 3 feet up that they needed to fix.
Right.
Because it's only, 1,000 square foot footprint. So that's why replacement cost is factored into risk rating 2.0.
I see.
And like I said, I just want to touch on that because I get that question like daily.
Okay, so the 1,000 square foot naturally will take much less to rebuild, but they should still have the 250 coverage. They should.
Yeah. And if the person's taking out a mortgage
Mhm.
and it's over 250, so say it's the Monmouth house is $1 million, let's just say,
Right.
and the 1,000 square foot house is 300,000.
Right.
The bank's going to require 250,000, which is the maximum coverage limit,
Okay.
on that to protect their asset.
Mhm.
But just even if they're not taking out a mortgage,
Mhm.
they should get 250,000 in flood insurance coverage, building
Right.
coverage. They probably should get contents coverage as well. And I think we really learned that with Ida this past year,
Mhm.
because there were a lot of people that either didn't have flood insurance, didn't have contents coverage, didn't have enough flood insurance, because they thought that they would never flood again since Sandy happened, and we're not going to get hit again for 100 years,
Yeah.
which isn't the case anymore.
Yeah.
So
Yeah, I was going to bring that up about coverage. That really did hurt a lot. Not coverage, contents. That really did hurt a lot of people.
Yeah. And I can tell you just from the sales end, I'm on my end of things when I'm trying to sell people that.
Right.
We do it every time, and we tell people, hey, do you want 50,000, 100,000? And I'd say probably 8 out of 10 people don't want it because it's not required by the bank.
Yeah.
and they think it, it might not flood, or, it's the unknown, right? And you're
Right.
paying for something that really you're not getting anything from it unless something happens to you. That's what insurance is.
Yeah, exactly.
So it just, a lot of people didn't, even my clients, I had 90 claims up in North
Mhm.
Jersey.
Wow.
And majority didn't have personal property coverage. And the majority that I talked to be honest, didn't even know, even though we had them sign a form saying, you don't want contents coverage.
Right.
And when they get hit, they go, oh, well, I got, my, this was damaged. This was that. Well, that's contents, it's.
Yep.
So it's definitely something that people should look at a little harder
Mhm.
than just relying on the bank to set the requirements, because that's what a lot of people do.
Right.
And, they should kind of just consider if this happens, where would that put me at financially?
Yep.
Because it could happen. We've seen it happen, and it's
Right.
starting to happen every other year.
Right. And what about the deductibles? I didn't think about that. The deductibles are pretty high now. I know.
Yeah. So banks will accept upwards of $10,000 deductibles.
Ooh.
That's a way to get the premium down, which
Right.
a lot of people do because they don't want to pay a lot.
Mhm.
But that 10,000 is coming off the claim.
Yep.
And that's a lot of money. So if,
There is. Yeah.
again, same with the personal property coverage, the person has to look at, like, if a flood happens, where will I be financially? Can I
Mhm.
afford $10,000 myself to fix whatever it is? Because I'm not
Mhm.
getting that in the claim.
Right.
And it's something that people really need to consider
Yeah.
when purchasing flood insurance.
What do they run pretty much? 2,500, 5,000 and 10,000? Is that pretty much it? Yeah.
Yeah. So they used to have 1,250, 2,000, 3,000, 4,000. With risk rating 2.0, they actually did away with those deductibles because they found that the majority of deductibles that were used, which today are the only ones really that people can get, are 1,250, 5,000, and 10,000.
Okay.
So they're the options that homeowners have to choose from. Obviously, the higher the deductible, so 10,000, the lower the premium.
Sure.
But when there's a claim, the smaller the payouts going to be.
You better have that money in the bank somewhere then, huh?
Exactly. Yeah.
That's it. So, okay. All right. Well, that was wonderful. I think we covered all my questions. I just wanted to get this out there because I know there's a lot of questions and a lot of changes, and this has been so helpful, and you are awesome. You are very knowledgeable, and we appreciate you helping us with all this. And Tyler, if you want to give your information out right now, we'll jot it down. So go ahead.
Awesome. Yeah. And again, thanks so much, Corinne, for having me on. But my name's Tyler Ardrian. Best way to get a hold of me, I'd say, is my cell phone. My number is 856-723-3666. Also, if you just Google Risk Reduction Plus, Facebook, we're on. You can look my name up on Facebook. I put a lot of videos out as well as content over in regards to flood insurance. LinkedIn, Instagram, I'm on everything. So just look my name up and you'll be able to find me.
Fantastic. All right. Well, thank you so much once again. And again, I'm Corinne from Remax, and you can reach me. I'm on Facebook as well, and all the social media. So I appreciate you, Tyler, and thanks so much. Everyone have a great day. All right.